G'day guys, welcome back to the Devon Too Good investing channel. Before we get into this video, I just want to start us off with a really good investing quote. So the quote goes, "It's not always easy to do what's not popular, but that's where you make your money. Buy stocks that look bad to less careful investors and hang on until their real value is recognized." Guys, today in this video, we're going to be looking at the super investors 13F filings. And for those of you who don't know, a 13F filing is a filing that pretty much fund managers managing more than $100 million have to file at the end of each quarter within 45 days of it ending. And what it does is it gives us retail investors a lot of insight into what they've been buying. Now, I kind of use these filings as ideas on what stocks I should potentially go and research myself. I don't blatantly copy, but I use it for idea generation. There are some weaknesses to 13F filings. They don't show short positions. They don't show any like sort of derivatives kind of plays. They don't show international holdings. They only show US holdings. But overall, I think they can be a really good tool. And this website here, Dataroma, tracks these 13F filings for us. So it makes it very easy. So in this video, we're going to be looking into Warren Buffett and his filing. We're going to be looking into Charlie Munger. We're going to be looking into Manesh Pabrai. And we're also going to be looking into Spier. So guys, let's get into it. Make sure you like and subscribe to my channel and like this video. So here it is, Warren Buffett's Q3 13F filing. We can see that sort of the large positions in this portfolio remain the same. We can see Apple's still by far the largest position. We've got Bank of America, American Express, Coca-Cola, Kraft Heinz, Moody's, Verizon, US Bancorp. And then pretty much from there we get to, a lot smaller positions. I'd call them lower conviction positions. I mainly like to pay attention to these higher conviction plays, but we can go over these lower conviction plays anyway. So, we see a small reduction in US Bancorp and, a fairly decent reduction in sort of Charter Communications, AbbVie, it's a pharmaceutical company, MasterCard, Bristol Myers Squibb, more pharmaceuticals. So you can see that Warren Buffett is kind of sort of de-risking some of his pharmaceutical positions. The only ad for Big Buff Dog is Chevron, obviously in the oil space. That's a 24% ad. So honestly, it's a pretty quiet quarter for Warren Buffett. No big moves on his 13F filing. I do know he owns some overseas companies, particularly in Japan, but obviously, as we discussed before, international holdings do not show up in 13F filings. But quiet quarter. Mainly, Buffett's been focusing on buying back his own stock, Berkshire Hathaway. So that would be sort of his largest sort of action during the quarter, is just share buybacks. So that's it for Warren Buffett. So next, Charlie Munger. This is Warren Buffett's sort of partner in crime. Charlie Munger manages Daily Journal Corporation, and we can see his 13F filing. There's only one change, and it's a fairly substantial add to Alibaba. You can see that he's added 82.71% to his position, and it's sitting just under 20% of his portfolio. Pretty much like Charlie Munger, his whole portfolio at the moment is pretty much in the US banks. You can see Bank of America, Wells Fargo. Not showing up in this filing is, of course, BYD. We know Munger owns some of that Chinese EV company. But look, I'm pretty happy to see this purchase by in Alibaba, because obviously I own some Alibaba shares, and when I see Munger buy that, obviously I've done my own research, but it gives me even more conviction in my position. And obviously the shares have continued to fall, and they did fall on earnings. Yeah, make sure you keep an eye out on my channel. I'm going to be doing a review of Alibaba's earnings very soon. But yeah, obviously the Alibaba change, that's quite significant, especially since Charlie Munger is the sort of investor who doesn't make changes to his portfolio very often. But that's really it, eh? Like, I'm just happy to see Charlie Munger, adding to his Alibaba position and averaging down. We can see that there's a reported price of $148 per share. And I believe Alibaba is about $140 per share today. Next up, we have Manesh Pabrai, who manages Pabrai Investments. And in his 13F, only 3 stocks have shown up. Of course, Manesh, he has a lot of international stock holdings, so this sort of filing is kind of misleading for his overall portfolio. But out of the US companies, Micron has been added to slightly, and then the big dog Alibaba has been reduced by 77%, which was quite a big shock to me, admittedly, when I saw this. But I think there are some possibilities on why he sold. I think most likely he's might have seen a better opportunity, perhaps in Tencent or Prosus. The reason why I think that is Manesh came out with an interview just a couple of weeks ago, and he was just talking up Tencent like crazy. So perhaps he's, seen the opportunity with Tencent, thinks it's better than Alibaba, so he's selling off his position to sort of reallocate that capital. Another sort of possibility is perhaps tax loss harvesting. So obviously Alibaba, Manesh Pabrai would be down. I'd say he'd be down between 20 and 30% on his position at the moment in Alibaba. So perhaps he's looking to tax loss harvest the losses with Alibaba with some gains from another position in his portfolio. It's a possibility. We probably won't know. Well, maybe we'll know next quarter if he buys back into Alibaba. It'd be quite clear that it was sort of tax loss harvesting, or otherwise known as a wash sale. But I don't know, other possibilities that I think are less likely is perhaps someone in his fund wanted to withdraw money and he just didn't have the cash, so he had to sell some of his position. But I think that's fairly unlikely. I think what's also fairly unlikely is that Manesh Pabrai doesn't believe in Alibaba anymore, because in my opinion nothing's really changed since he's bought in. So yeah, in my opinion, those are sort of the main possibilities. But yeah, who knows? We've got no way of really knowing unless he comes out and says it for himself. But yeah, the two most likely outcomes, in my opinion, are that Manesh is buying Tencent with, and he wants to hold Tencent instead of Alibaba, or it's because of tax loss harvesting. But yeah. Anyway, that's Manesh Pabrai's portfolio for Q3 2021. So now we've got Guy Spier's Aqua Marine Capital portfolio here. And it's been a pretty boring quarter by Guy. He's made 0 changes to his portfolio. We can see that he holds companies such as Berkshire Hathaway, American Express, Bank of America, MasterCard, Ferrari, Micron, Moody's, Seritage, Alibaba, etc., etc. You can see the list here. One thing that I like about Guy Spier is his portfolio is fairly concentrated. He doesn't have too many sort of low conviction plays, which is nice to see. And he also he's extremely patient, and as sort of all great investors say, money's made not in the buying or the selling, but in the waiting. And we can see Guy Spier sort of just chilling and keeping to that quote. But there's not much to report here. He hasn't done anything. What am I supposed to say? So anyway, guys, Thanks for watching this video. Make sure you like, make sure you subscribe, and I'm going to be back soon with part 2 of looking at what super investors have been buying. So make sure you tune into that. Have a good one. See ya.